on, traders? It's Kyle from K Capital. It's November 15th, 2015, about 7:45 Eastern Standard Time. Hopefully everyone had a great weekend. Very quickly, I want to go over the overall markets and some of our positions. Right now, we're taking a look at the Dow on the daily. You're looking at a long-term time frame here. I just want to recap where we're at in the overall macro trend. Obviously, after the recession, we saw a nice uptick, for the better part of 3 years. We broke through the 200-day moving average several times, but for the most part, that held as nice support until obviously recently. So that was, July, August 2015. We broke down through that 200-day moving averages. We hit a nice level of support here in the 15,500 range, and we rallied back up to the 200-day moving average. So overall, we're still in a bull trend. We're just seeing a retracement, which is typically in the 10 to 12% level when you retrace. But overall, we're still in a bull trend. The downside is the volatility has been pretty severe, as we're well aware, over the last couple months. But nonetheless, we still had some nice winners. But right now where we're at is we saw a nice bounce off of that 15,500 level, and we shot all the way back up to 1,800. And naturally, over a 300-point swing like that, you're going to see a pullback like we have. Frankly, I think over the long term, 6 to 12 months, we'll continue in that bull trend. Right now, I think we're going to see, with the Paris attacks and with the volatility in the Middle East, the volatility is going to impact crude, and crude is going to obviously impact the U.S. markets. So I think we're going to open up tomorrow down just off of the Paris attacks, which obviously is a horrible event. The markets are going to take an impact because of that. And I think the futures right now are down in the Dow. And I think we are going to continue down tomorrow and maybe the early part of the week. And right now, it's just going to be a matter of, taking a step back, playing smaller positions in terms of our swing trades. For any new positions we do open, they will be, half position sizes or a third position size versus the normal 5 to 10% of your total capital. So keep that kind of in the back of your mind through the week as we approach, the next week going into the 16th of November. We're going to take a step back in terms of our position sizing. We want to take a look at the Russell 2000. This is obviously going to follow a similar pattern, similar to the Dow, that is, in the sense that, we rallied through support and we basically saw a nice uptick all the way to the 200-day moving average. And obviously we've pulled back with the overall markets here. One thing that is interesting in this is that we haven't really broken through the 200-day moving average. Once we hit that, we really just rallied straight down and saw a sell-off. But again, if you look at the overall market for the last several years from a macro standpoint, we're still in a bull trend. Now it's just a matter of, finding stability in the overall markets and really just seeing a nice upward momentum above the 200-day moving average. So once we get above that 200-day moving average, just to continue with the current comments, I think we're going to see a nice uptick to new highs. It's, again, just a matter of finding support in the overall market. And I think for the short term, I think we're going to still see some downward pressure because the 200-day moving average is serving as such a strong area of resistance. Let's go to the S&P, and we can get a sense of where that's trading at. Not too surprisingly, you can see that it's definitely going to follow a similar pattern to the other markets, and the volatility really is just a matter of, following the more or less bearish sentiment across the entire world. What's interesting is similar to the Dow, we did break through the 200-day moving average. And Thursday and Friday, we had two very large sell-offs here. I would expect more bearish sentiment tomorrow, given the volatility, especially in Europe right now. And I think we do sell off a little bit more going into the week. But if we want to take that and kind of open up into our specific positions, one thing I'm keeping a very strong eye on is Crown. What I've outlined here is really the support levels that we've seen over the last 6 to 8 months in this position. We've obviously closed this for 25% when we entered in the 475 range and sold upwards of $6. We're still maintaining roughly half that position size. As you can see, we're seeing nice support in these two areas here in the 530 to 550 range. That level and those buying areas in terms of the long candles here are telling me that there's still buyers in this position. So I think this might be a good area to add as this levels out. But again, we're more or less sitting on I think 25% return in the first half in terms of our first buy, and then we added to this, I think, in the 570 to 580 range about 4 weeks ago. So I think this is something to where right now we're sitting about break even in the last half of shares, but we're going to continue to watch this to see if we might open up an additional position. I'll cover 2 more positions, and then I'm going to do a separate video for our members. I'll post this publicly, but EMKR is something that, obviously I've been very public about in terms of the overall fundamentals here, as well as the technicals. This great breakout candle in high volume, not their latest earnings call, the one prior, we waited for the pullback to the midpoint, and that's really served as a great level of support. This nice flag formation here, if I want to really break this down from the technical standpoint, is you can really see that we saw significant buying in this level. And then we can kind of see a nice, really strong level of resistance here that we broke through. So that's really forming a pennant formation over the last couple weeks that we broke through a nice volume about, I think, not last week, but the week prior. And right now we're starting, I think, to make the trend upward to test 740 and then hopefully 8+. We do have earnings coming up on the 12th of December, so roughly about 3 to 4 weeks. It's something that obviously we're going to be in this probably until then, because I think this is going to trade higher. So right now it's something I'm definitely keeping an eye out. It's one of my favorite positions that we are in. And finally, we are in, I think, 7 total positions. So I'm only going to cover 3 here. This is one that I'm going to make a video about in terms of the strategies we look for, and really that's the gap and go. And so what I mean by that is, you can see a nice area of support in this level here, and we broke through that last week. What's interesting is when we gap up, what you really want to look for here is finally a break of that high in the gap. So let me zoom in here and I can kind of break this down a little bit more. So the gap and go pattern really is, you see a nice breakout in terms of resistance from some form of pattern, whether that's a pennant, a flag, or a triangle formation. You see a pullback, and you want to wait for roughly 3 days before you see any type of activity in terms of a buy or a short decision. What you want to see is then a final break of that high after the 3rd day of trading. So Friday was that 3rd day. We actually went long, I think right in the 870 range, I think. I'd have to go back and check. But nonetheless, if we want to zoom out, we can see that there's definitely bullish momentum here. There's really no resistance until you get to really the 930 to 950 range in this level here. We're trading above the 200-day moving average. That's obviously bullish. You're seeing nice level of support in terms of the 13 to 50-day exponential moving averages as well. So again, the really area I'm watching here is the low of this gap up, 825, and then the high of this gap at the 870 to 875 range. I think, Friday's definitely served as a nice indicator in terms of people still being willing to buy this position. I think we finished up, 2 to 3%. And I think, if we test that high and break through that on high volume, we should see 950 to 10. So stay tuned with this position. Again, for members, I'll outline the rest of our positions in another video. So stay tuned on that. And for anybody, members or not, if you have any questions about the service, K Capital Advisors, Kyle Matthew at kcapitaladvisors.com. Please shoot me an email. We'll talk soon, and have a great night.